Hi dear traders, unlike the Fed statement, the triple witching hour in the stock market failed to affect the currency and commodity markets. Since the central banks of developed economies did not drop any hints about the timing of the monetary policy loosening, the US regulator also provided hawkish comments. Let us figure out how they affected major currency pairs. In an interview with CNBC, New York Federal Reserve President John Williams disclosed details of the meeting that took place on Wednesday. He said that rate cuts were not a topic of discussion at the moment for the central bank. What is more, it's too early to discuss monetary policy loosening. Meanwhile, traders are waiting for the key rate cut as early as March 2024. Notably, just after the publication of the interview, expectations dropped to 65% from 75%. The US dollar index, which measures the greenback's value against a basket of 6 major currencies, managed to recoup some losses amid the interview and climbed to 102.50 points. Nevertheless, it closed the week with a decline of 1.33%. Traders who prefer a carry trade strategy are more interested in European currencies at the moment. The highest bullish activity was recorded in relation to the euro and the pound sterling. The euro closed the trading week with a rise of 1.24%, sliding from a two-week high, which was reached when investors were digesting the meeting results of the European Central Bank and the Federal Reserve. On Thursday, the ECB kept the key rate unchanged. ECB President Christine Lagarde pinpointed that the regulator was not discussing the key rate cut, and that future actions depend on macroeconomic figures. Notably, macroeconomic data, in particular slackening inflation and lower activity in all key sectors in the economy, is pointing to the necessity of lower rates. Against this backdrop, the euro will hardly maintain its bullish trend. The British pound also closed the previous week in the green. The likelihood of the uptrend developing is higher compared to the euro. The fact is that during the meeting on Thursday, 3 out of 9 committee members voted for the key rate hike. It's obvious that the Bank of England will not raise the benchmark rate in the near future. However, it may keep it at the 15-year high to control inflation. Against this backdrop, demand for the pound sterling resumed rising. The pound-dollar pair closed the previous week near the level of 1.2675. The Japanese yen was the main beneficiary of the previous week. It reached the highest position since July amid investors' disappointment about the Fed's meeting. Let us take a closer look at these meeting results. According to the press release, the FOMC members were considering a plan for a gradual cut of the key rate to 4.6% by the end of 2024. However, the outlook for key rate changes by the Bank of Japan has remained the same. It's obvious that the benchmark rate will be kept in the negative area at the meeting scheduled for Wednesday. It means that the yen will hardly continue gaining in value. Last week, investors were actively putting money in gold as all eyes were turned to key rate changes by largest central banks in the world. The fact is that gold is considered the most attractive safe haven asset amid a drop in bond yields, which directly depend on the benchmark rate. Thus, gold added 0.69% and climbed above $2,000 per troy ounce. Traders of oil also found reasons to open long positions. Brent crude closed the previous week with an increase to $77 per barrel. This was the first positive weekly result in the last 2 months. The Fed's hint about a possible key rate cut next year made oil and other commodities denominated in US dollars cheaper for buyers. An outlook for energy consumption also encouraged traders. A monthly report from the International Energy Agency showed that global oil consumption could rise to 1.1 million barrels a day in 2024, which is 130,000 barrels a day more than the previous forecast suggested. OPEC also predicted that global oil demand would mount to 2.2 million barrels a day in 2024. These are the trends of the last trading week. Do not miss our daily news reports to be always in touch with the latest events. See you!